Welcome everybody, thanks for tuning in again, I really appreciate that. And today we talk about some positives for Chinese stocks and the broader economy. I think there are some really interesting things going on, one in particular, so I think that's a very smart move, and I will give you my thoughts in detail on that. I'm trying to keep it short and precise, so please smash a like and share the video if you find it valuable. And now let's start with what I said in the past about the third plenum, which was an important economic event, in which I said, the event itself may not add to short-term stimulus. However, it will, pave the way for a long-term path and outline how they are going to bring the middle class, which is currently around 400 million people, to 800 million people. That's a goal announced by Li Qiang. And so, while this was not the event for short-term stimulus, I said, due to the fact that currently some data suggests that the Chinese economy is not growing as fast as they have set the targets for this year, around 5%. Therefore, I do expect some short-term measures along with that in the coming weeks after the event. And if you look really detailed, we do have some. Just yesterday, again, the Chinese have announced that they are adding some liquidity to the markets. And today we got a real big signal, in my point of view, and a real smart move as well, because they basically announced that they will allow people to mortgage, basically changing their existing mortgage rates, which in the past may have been higher. So if you go back 10 years or more, average mortgages in China were around 6%. Currently, they're much lower and still higher than most countries that we've seen during the days where we had zero interest rates. So there is still interest rates that can be cut for the Chinese government if they want to, but many criticizing China for not being more aggressive on the cutting side, on the quantitative easing side and so on. But now this move is interesting because what they're basically doing is they enable consumers to have higher disposable income. And how they're doing that is if you are able to remortgage or alter the rate of your existing mortgage. Let's say you took it out 10 years ago for 6%, and now you can refinance the same mortgage for maybe 4, maybe 3, maybe in the future 2%. Then obviously that's freeing lots of your disposable income, meaning you've got more money to spend. And I think this is why we see stocks like NIO, like JD.com, like Alibaba and so on up this morning. And at the same time, we see banks stocks going down, because ultimately somebody has to pay for that, and that will be the banks, which will have less profits for sure. But in the Chinese case, that's not an issue because they are state-owned in the first place, right? So they are highly regulated. By the way, also there is not an issue with bad debt when it comes to real estate mortgages in China, because you have to pay down so much deposit, and also there's not much leverage in there, and systemically there is not an issue with that. While we see the real estate developers, they have been in trouble because they've been growing too quick and taking on too much debt. So what China's doing there, in my opinion, is taking a little bit of an inspiration from what the US has been doing in the past. It's a smart move because it's not really giving you those free vouchers for consumption, the free checks that we've seen written during the pandemic in the Western countries. And now, just think from a Chinese perspective, you are suddenly living in a world where actually not only go home prices down, which, yes, I know for the wealth effect, it's negative. However, for new buyers, that's great. If you are able to afford homes, and that helps for family foundation, that helps for your consumption. And now existing buyers that have bought in the past will be able to gain access to those lower rates, and possibly even lower rates in the future, because China still has this opportunity at around 3%, where they currently are, to cut rates even lower. And I think that's a very healthy move. It's good for the disposable income again, and it's also in a way that it may add a little bit of inflationary pressure, that's for sure, but it's not in this unregulated and free stimulus move that we've seen in the past. by Western governments. And you see the Chinese disposable incomes are going up each year, and so I think that's a contributor to happiness, a contributor to being able to afford a lifestyle that's great. And ultimately this will help also the companies in China. By the way, I'm just seeing a news here, Alibaba also is winning an approval in a years-long scrutiny with some of the regulators there. Finally, yesterday I saw an author from a German newspaper talking about some issues with the delivery services in China regarding work times and how the algorithm is putting pressure on everything like that. And that's exactly what the Chinese government has done with these regulatory scrutiny since 2021. They have tightened their grip on some of these big players like Alibaba, like Meituan, like JD and Tencent and so on. Basically saying, look, we have to see after the workers, and we have to be sure that they're paid accordingly. We have to see that the working times are okay. And the Western newspapers are now whining about the fact that these Meituan drivers, which by the way Meituan had great earnings, are still under so much pressure, while at the same time this is exactly what these government regulations were all about in the first place. And now we're seeing even signals here with the case of Alibaba that this online probe is over, that the Chinese government also is trying to signal here to the entrepreneurs, to the stakeholders, to the players in the economy that they don't want to disrupt the economy and the markets, but they want to set the rules and everything must be according to it. So you see here this long-term plan panning out for the announced goal to get from 400 to 800 million middle class in the next decade. And this is also what I use to look at as the most important plan overall. We have all of this talk about real estate, about stimulus, about demographics, about overcapacity and so on. Don't be afraid to see how the Chinese government is going to solve that. We've got so much commentary, including mine, which might be, definitely less intelligent or smart sometimes than what these players know firsthand about their own economy. So we are just sidelined here, but I think that the signals today, or the last couple of weeks actually, are quite going into the right direction, in my opinion. But what can I say? This is just my opinion. I hope you enjoyed this video. Thanks for watching. Let me know your commentary in the comment section, and then see you in the next video.